Okay, in today's interview, we have the one and only Jeff Clark, researcher, writer at goldsilver.com, all around interesting guy. He's the gold advisor on Twitter and would be one of my gold advisors as well. But I also renamed you on the last episode. Remember, I said I renamed you to the Gold Buddha. And so it's great to have Jeff on. I'll have his Twitter link right there down below. For everyone listening, please make sure you hit the like button on either side. Give us your silver price prediction for 2021 in the comments right there down below. And last but not least, just want to thank our channel sponsor, Vizsla Resources, one of my favorite silver stocks. So thank you, Vizsla, and welcome to the show, the Gold Buddha, Jeff Clark.
Well, that's nice of you to say, Jake. It's great to be back with you, man. I've been looking forward to talking to you again. So if you're going to call me the Gold Buddha, then I'm going to call you Samson.
I thought it was Jake the Freak.
Jake the Freak, Samson. Yeah, I haven't decided on which one yet.
Okay, deal. So you and I haven't talked in a while. It's good to see you again, first of all. And second of all, good time to have you on. It's been a kind of a backbreaker, I think, for a lot of people right now. Gold and silver, had that great run up in August, and it's kind of slowly but surely went backwards. And, we've had the dollar kind of even going down for a lot of this without gold movement. Now we have the dollar kind of moving upwards and rates kind of moving upwards, and people are starting to get unsure of whether this gold and silver bull market will continue. So what do you chalk up this stagnation to, and how do you view what's begun to take place?
That's a good place to start. I think it's a fair question, but let's look at this here. What happened last year? Gold outperformed the S&P 500. It outperformed the Dow. Silver outperformed the NASDAQ. My portfolio outperformed almost every major stock except Tesla. So it had a really good year, okay? And Bitcoin. It had a really good year, right? So is it really surprising to see gold and silver take a breather after such a run? From its March low to its August high, silver rose 140%. That's crazy, for a metal, okay? So I think it's not surprising to see this. You could call it a pullback, but I think a more accurate term would be a consolidation, right? We're in a period of consolidation. We've broke no technical indicators that say we're in, we've lost the bull market and we're in a bear market now. I'm not the best technical guy, but there's no indication to me, technical or fundamental, that we've entered a bear market. This is a period of consolidation, and as you know, on Twitter, I've been using this opportunity to buy more stocks on the down dip, more mining stocks on the correction. So I think big things are still ahead. Again, it's not surprising to me that we've had this kind of consolidation period after such a big run up. I think the next catalyst is probably going to be when we have some real world effects of all this currency printing and stimulus and monetary and fiscal. We can get into that if you want, but I think we're going to need to see some real world effects of all that before we see a catalyst for the next leg up. But is it coming? I'm betting massively that way.
So when you say see real world effects of that, are you referring to something such as seeing inflation? Are you saying seeing a market crash? Are you saying seeing documents signed that stimulus money is coming out? What do you mean when you say see the real world effects of that before we get a sustained movement upwards for gold and silver?
Yeah, any of the above, and it could be something else as well, even a black swan or something like that. So for me, though, I think the real world effect is going to be this. So Jake, I'm going to give you a puzzle, okay? And I'm going to see if you can figure out why I think silver is going to be the best performing asset this year. Okay, you ready?
All right, I'm ready.
The puzzle is this. So Jake, I'm feeling really cooped up. I'm tired of being stuck at home. I want to go out to my favorite restaurant again. I wouldn't mind going to a bar or a concert or something like that. And Jake, I miss going to Vancouver and I want to travel again. I want to go to Grand Cayman. I go there every year except this year. So that is why, and this is the puzzle, that is why I think silver is going to explode in price within a year from now. So why do I think that? What's the answer to that puzzle? Why is me being cooped up a signal that silver is going to soar within the next year? Well, let me ask you this. When the economy reopens again, right?
Right.
Are you going to go eat out more, maybe?
Well, I mean, I live in one of the few areas that's open. I'm the wrong person to ask that. Like one of the only counties that's like everything's open. But please carry on.
But do you think more people will go out to eat once the economy reopens again? And I know we may not go back to the old normal. There will be a new normal. I know all that. But I'm saying at some point the economy is going to reopen. Do you think people will want to eat out more? Do you think people will want to travel more? Do you think people might spend more? Do you think when the economy opens up again, Jake, that your wife might want to go out and shop more and buy more things and spend more money?
Why do you think that all this movement's good for silver?
Exactly. That's the question. Why do I think that? And that's because when all of this demand goes back into the economy, people are going to buy more stuff. They're going to do more. They're going to travel. And the demand is going to shift from below average to above average. It doesn't even have to be this ginormous spike, but it's going to go from below average to above average. And when that happens, that's going to push on supply and it's going to cause inflation. And what's the best hedge for inflation? What's the best performing asset that responds directly to inflation? Well, gold, obviously, but silver will respond more. In fact, silver's two biggest runs in history were in the 1970s when we had real inflation. And I'm talking about CPI inflation. I know we've had monetary inflation. I'm referring to consumer price inflation. And then from 2009 to 2011, we had the fear of inflation. Silver was the biggest performing asset at that time. So I think there's going to be a demand push on the consumer side, and the supply won't be able to meet it. I think that's going to cause some sort of inflation. Look at it this way. The inflation rate right now, last week, was 1.4%. The CPI was 1.4%. So I think by this time next year, when you and I talk next year, I think it's going to double. I think it'll be 2.8%. And
wow.
if I'm right, then you have to cut your hair.
I've already said I'll cut my hair if silver goes to $75 in the year of 2021. I don't think that'll happen. So I made a bet that would be a stretch.
Yeah, probably not this year. But hey, I think that's coming. So
you think, so let me summarize, because this is kind of interesting too, and something I've been really fascinated with, because I've also had Jim Rickards on, had him on last week. And so he thinks that we're not going to have inflation because of a lack of money velocity. Whereas you believe that as things begin moving, that's basically going to be a push in money velocity that will create more inflation in consumer things because people will be out there more. Am I understanding that?
Yes, but listen, Lynn Alden has done, I don't know if you've had her on your show. But
yeah, she's coming on again in a couple days, actually, but we had her on. Yeah, please share with me.
Ask her this. Can you have inflation without higher currency velocity, the velocity of money?
Yeah.
Can you have inflation with that? And the answer is yes, you can. You can have higher inflation without the velocity of money. So there's a couple things I'd point out. First of all, input costs are already rising across the board for all kinds of consumer goods, for industrial goods. If you read reports, the stuff that is used to make stuff, to manufacture stuff, all those costs are going higher, right? You have, I wrote all this down because I wanted to tell you all this. You have shipping costs for both consumer and industrial goods are rising. So if shipping costs are rising, they have to raise the price of the product to still make a profit, right? You have food commodity prices that are skyrocketing. Soybeans, wheat, sugar. Look at a lot of them. Pull up a chart of soybeans. It looks like a Bitcoin chart. The price of soybeans looks like a Bitcoin chart. It's going crazy, okay? You have many analysts already, every day, even this morning before our interview, I saw another report of an analyst saying there's going to be a supply chain bottleneck when the economy reopens again. The economy is not going to be prepared for that. And here's another thing. Savings rates in the US and probably many other countries as well, but in the US, savings rates have doubled. They've doubled. So you have people with more cash to spend. They're not spending, not spending, not spending, and all of a sudden they're going to be spending a lot. You have people in the upper middle class and the wealthy that have more disposable income right now. They're actually richer right now because they haven't been spending. They've been sitting on this money. They're not out spending money. They've got plenty of cash to go out and spend. So I think I'd like to bet Jim Rickards. I think I'm going to be right. But here's the thing, Jake. Here's the thing. Here's the great thing about it. It doesn't matter if I'm right or he's right or we're both right or we're both wrong. Gold and silver are going to go up. They're going much, much higher for multiple reasons, not just the inflation deflation debate.
I think one of the ways to really, for me, when I'm kind of objectively looking at that, is seeing the price of all these things that you said. You talked about lumber. I read a quote yesterday from the head of commodities research at Goldman Sachs, and he said people are now calling corn, now they're calling it Bitcoin. That's what he said.
That's great.
That's what's very interesting to see. And how do you stop this upward spike in the price of of gas, soybeans, all these things? I mean, they're clearly going up. So I wrote down that question: can you have inflation without the velocity of money? So your expectations out of this,
a lot, right?
With the money increasing,
I'll bet you, I know her answer. She's going to say yes, you can, and she'll point out periods in history where she can show you where money velocity didn't actually grow that much, and yet inflation did.
So you said another thing on the subject of inflation when we were discussing is you pointed out the two times in history that silver performed great in the 70s, and then you said 2001 to 2011. And you said for 2001 too, that I was young then, so I wasn't following the silver market, or I don't recall it in real time. But you said in the 1970s because of inflation. But you said in the 2000s, it was because of a fear of inflation. So right. You're saying that you made a point to say fear of inflation. And you, looking back as an investor in the market then, that was a driver?
Oh, absolutely. I think everybody expected inflation. And again, we're talking about the CPI, consumer price inflation, not the monetary inflation that it ended up inflating stocks and all of that, right?
Right.
So, for consumer inflation, I think everybody expected that, me included.
Got it.
I was wrong about that. We didn't get consumer price inflation, so that was bad on me. But there was still the fear of it. And usually, when you see a big move in gold and silver, is when the inflation expectation and the fear of inflation or the actual inflation is just starting, and it starts to move in a significant way. So it doesn't have to double like what I was saying earlier, but if it just moves from 1.4 to 2, that's a fairly significant move. Or if the investment community fears there's going to be more inflation, if their expectation for inflation rises, that could be a starter. So you need to have your gold and silver before this all starts, of course, right? But once those things kick in, that can really be a driver. That can be a catalyst in and of itself for gold and silver, regardless of what else might be going on.
So you just believe, you painted a convincing macroeconomic climate for why gold and why silver. You pointed out that silver historically has performed best in inflation. So the macro's there. But then when you look back at the present environment of the market, there's, you know, been, I mean, not you told me on DMs, you were hoping prices got cheaper, you know, whereas a lot of people maybe they're less experienced in the market. They become very frustrated by this, and they are starting to say things like, you know, well, now there's Bitcoin and that's why, or, you know, everything's going to recover, so you won't need gold or silver anymore. So you clearly don't fall into that camp. What is your expectations for gold in 2021?
Because I'm confident of the big picture of gold and silver, and we can talk about what all those big picture reasons are. I mean, really draw it up, you know?
Yeah, give us your big picture. Give us your end game. I've been loving asking that question recently, asking people what their end game is for gold.
Right. Okay. But let me just say, because I'm confident in the big picture, all these dips and corrections and the lag and weakness, whatever you want to call it, those are buying opportunities because I'm looking down the road at this. I'm not looking at these little things right here, right? So I'm using that to load up. I mean, people that became wealthy in the 1940s and 1930s, they became wealthy because they bought during the Great Depression. You get rich in bear markets. You don't get rich in bull markets. Bull markets make you rich, but you build the wealth in the bear market. Now, we're not in a bear market. I'm just saying that during periods of weak prices, if you're confident in the big picture, if you're not confident in the big picture, then maybe you shouldn't buy. But for me, that's a wager that I'm willing to make. And I've made a fairly big wager that I'm going to be right about the big picture sooner or later in some way or another. And so therefore I'm buying in the short term. So your other question was, what's my end game, or what was it?
What's your end game? What is your big picture? You know, what does that, how have you worked that out in your head?
So for me, the issue is it isn't the price of gold and silver. It's probably going to be the price being very, very high. But it's less about the price and it's more about the value. Okay, so it's what gold and silver, since they're money, if we're going to define gold and silver as the only money, then that's the value, and that value is what it's going to buy you, right? So if I can buy a house, the average U.S. House for 2,000 ounces of silver, 4 mint cases of silver eagles, for example, it isn't going to be the price of silver at that time. It's going to be that value is so great that I can't pass it up, and I'm going to have to sell some of my silver to buy a house. And you can apply that to anything. You could apply it to the S&P, other investments, other things you want to do in your lifestyle, you know, maybe haircuts for Jake. I mean, whatever the case may be, you know. I'm teasing you about that, but I love it.
You gotta say, so you're talking about at a price like that. I mean, you're talking about the cost of many haircuts. So you actually believe that 2,000 ounces, so to speak, will really be worth a home? You really think that?
I think that is entirely possible, yes. And one reason I think that is because it's done it before. That was the low of the ratio back in 1980 at silver's peak. And get this, Jake, when that ratio hit that low, real estate prices were actually rising. Huh. It's just that silver and gold, but silver more, rose more than the price of homes back then. And what do we have now? We have an undervalued silver price by almost any measure. And we have real estate prices that in the midst of a global pandemic are still going up. We have overvalued, or at least highly valued real estate versus a low valued silver price. I think those things come back together and they meet at some point and make a very, very attractive value proposition for people like you and I that have a meaningful, significant amount of physical metal they can just swap like that for that. So there's no guarantee. I could be totally wrong, but I'm not betting that way. I'm betting that I'm going to be right. And it's not just that the ratio has already been there once in history. It's the situation and the set of circumstances that we find ourselves in right now at this point in history that make me bullish on gold and especially silver. You know, the monetary stimulus is one thing. The fiscal stimulus is another thing. By the way, that's another reason I'm bullish on inflation, because the fiscal stimulus that Biden wants to do, fiscal stimulus is different than monetary stimulus. Monetary stimulus goes to the banks first, usually ends up inflating asset prices, right? That's what we saw 2009 to 2011 and even recently. Fiscal stimulus gets injected directly into the economy right away, immediately. And we know that package is going to be in the trillions of dollars. He hasn't proposed a specific dollar amount, but we know that it's coming and it's going to be trillions. It's going to go right into the economy. And it's kind of like the difference between me giving you $100 and you putting it in a savings account versus going out and buying groceries with it that day. That's the difference between monetary stimulus and fiscal stimulus. I think fiscal stimulus is another reason we might see inflation.
Interesting. How much? Let's talk about. You painted the picture. One of the ways you invest in that is mining stocks, where you have even considerably more leverage to the price of gold and the price of silver. So that's kind of one of your areas of expertise. So you were saying you had quite the year in 2020. So how did it pan out for you, and what are you expecting moving forward?
So I say this in complete humility. I just want everyone to know that. But my personal portfolio, which is just stuffed full of only mining stocks, did 4x last year.
That's what's up.
So at one point it was 5x through August, right? And
I was quite the correction there.
Yeah, quite the correction. But and to be honest, I admit it, and I disclosed on Twitter, I was taking profits, at that time because things had run up so much, and so I was taking profits and I held on to everything, a core position, everything, but I was scraping profits off the whole time. And now what I've been doing the past couple of months, I've been buying and what I really like is that some stocks I really wanted, like here's an example, Aftermath Silver. I wanted to buy that stock, and I know CEO Ralph Rushton personally. I wanted to buy that, and the darn thing just took off. And one thing I've learned is I refuse to chase stocks. I just refuse to do it. I've been burned too many times. I got burned in the uranium market back in that bubble back in 2007, I think it was. I started chasing those up, and oh man, I got walloped hard. So I refuse to chase, even though I like the company and I like Ralph and I'm excited about the prospects there. After it doubled and it just kept on, streaming up, I refused to buy it. So what happened now, though, is because there's been this pullback, I was able to take an initial stake in that. Admittedly, it was at a higher price than what I wanted, but it was still half. It had fallen like 50% or something. So I got it on a sale price for where I think it's ultimately headed. Aftermath is speculative like any junior stock is. But I think that's a good story, and I wanted to be part of it. And this correction is the only opportunity I had to buy that stock. Because if we didn't correct, it was going to keep on going, and I wouldn't have been able to buy it. I would have refused to buy it, let's put it that way, because of the huge run-up. So that's what the correction has done for me.
Interesting. So let's talk about where you focus. So you stay away from, you buy what somebody that's unfamiliar with the market would say is risky or speculative, in that you don't buy producers. You only own one producer. That's First Majestic. We could talk a little bit about your expectations in that a little bit later. So
Sure.
how do you scout? What do you look for? What were you buying during the last while? What are you buying now?
Sure. I actually own 3 producers now.
Oh, 3.
Well, that's because I didn't buy the producer. I bought the developer,
Oh.
right? And it became a
Yeah,
producer.
there you go.
So even there, I didn't even buy a producer. So the other 2 are Equinox and Pure Gold.
Mhm.
And, I've taken profits on both those. I like both companies. I still have a 1x position, meaning a full position for me on that stock. Okay. And I was at, maybe overweighted on both of those and decided to take profits, but I wanted to keep exposure to both of them. So, but I did take profits, and especially in Pure Gold, that was a fun ride. I think I did 5x on that. And so, I was able to buy like 4 other juniors just with the profits on that stock, and yet still have exposure to Pure Gold. So it's awesome. That's how you build wealth, right? That's how you do it. So, so sorry, what was your question?
No, that's perfect. Yeah, Pure Gold's been a good move. But what are you
What am
looking
I?
at buying now? What have you been buying? I am, from a particular stock perspective, but also, are you focused on staying just in this, I guess, what someone would call these smaller, more volatile picks? What are you looking at now?
Right. So I think investors should be aware of that. If they don't know, I do tend to eat further down the food chain, right? I'm looking at juniors and explorers and developers and the pre-producers. That's more speculative. So the mining industry is already one of the most volatile industries on the planet, right? And I'm in the most volatile part of that volatile industry. So you have to be aware of that. You have to have the emotional fortitude to stomach that, right? And you have to have the financial breadth to be able to handle that. Meaning you can't just buy 1 or 2 of these, you got to buy a basket, right? So anyway, the ones that I really like, I think everyone who follows me on Twitter knows I really like Silvercrest Metals. I've been in that for a long time. It's now, because it's risen so much, one of my larger holdings. But I would still buy it on any dip, because this is a huge, so it's going to mine. There's no doubt about that. It's big, it's rich. I've met the CEO. I've actually interviewed with him. Eric Fire is his name. He's great. He's had multiple previous successes. He knows what he's doing. So this is going to be one, and it's going to go into the pre-producer sweet spot, as Louis James at Independent Speculator likes to call it, right? I love that system that he has. And he was the first one to actually do this comprehensive research on all of this. There's a re-rating as a stock becomes a producer. And so that's a good time to ride the stock, and that place for them is probably 2 years away yet. So this is still a buy, in my opinion, despite it running up a lot. It's got a ways to go, I think. And here's one I haven't really disclosed that much before. I think I did disclose it on Twitter, though, and that fits in this pre-producer sweet spot, and that's Ascot Resources. In US, it's AOTVF. Basically, they have 2 gold projects that are going to feed ore into a mill that they're going to restart. And the IRR, internal rate of return, that's a good metric to look at in a feasibility study. You want the higher, the better. So 20% is good, 25% is better, 30% is great. This one is 51%. So for them to pay back the construction of building this mine is only going to take them 1.4 years. That's crazy. That's how big and rich this mine is, how economic it is. So I like it. In fact, I've been wondering to myself, and I even wondered out loud on Twitter, is this the next Pure Gold? Because it could do that, it's that perspective. So I like that. And plus there's a lot of exploration potential with it. So that's one I'm kind of excited about. Another one is Orla Mining, ORLA. So they already have 10 million ounce gold resource down in Mexico. They're actually in the sweet spot now, I think. It's fair to say they're actually building the mine. They'll probably be in production, I think, by the end of the year. You can double check on their website, but I think it'll be by the end of the year. So the timing is good on that one too. So those are some pre-producers that I really like.
Interesting. So let me ask you then, where is your focus primarily on companies that own silver, or is the types of small cap stocks that you're buying, does it not really matter whether they're gold or silver because they already have so much room to run to begin with, or are you focused more on silver?
No, I'm not focused more on silver, but I'm really turned on by silver because, it's such a small market and there's just not that many of these. I mean, it's stupid silly. It's like there's what I think Apple Computer could buy every share of every mid-tier and major primary silver producing company with like 5% of its cash. Every share of every company right now, not the explorers, the producers. I mean, that's insane. That's just how small this market is. And I just think when the cash comes flooding in and people get turned on to silver, I think it's going to fly. I really do.
So on the subject of that in the small market, switching over to the actual physical silver, I've heard that argument that Apple and these companies can buy all the mines and all these things. So let me ask you, you talked about how the liquidity in the equity side of silver is, so tight. But on the physical side, with the amount of research that you do, mine pales in comparison, but I found it really interesting to see the about 6.6 decrease in the amount of silver mined in 2021, that being, basically looked like to me the lowest since 2011, only 760 million mined ounces. And then, these Democrats say they want us to move from 10% solar to 50% in like 3 years or some really small. I mean, obviously that's going to be impossible, but with the amount of silver, 0.6 of an ounce, and basically all these panels, it's like 400 million ounces. Then you got China that says they want to do all this solar. Then of course you have tech and all these things. One of the things that's compelled me to the uranium market is like the pretty obvious black and white supply and demand. Now, this is something that isn't discussed much in the silver market. What do you think about do you think that there's a real opportunity for there to be a shortage that causes, a squeeze on the price movement, or not really? There's just so much silver that's been mined.
For silver, yes. So, excuse me. The issue is new supply is in a decline. And even with the bump in price we've had in silver, it's not enough to bring a whole lot of new mines online. In fact, in 2019, guess how many new primary silver mines came online in the world? 1.
0? I was going to say 0.
Yeah, 1. Now, I don't have the data for 2020. I don't know that it's known yet, and there will be more. Some of the ones I talked about have silver. They're, Silvercrest, that's going to be a big one. MAG is coming online, right? So there's going to be more that comes online, but there's so few of these things, and we've spent so little cash exploring for them, developing them, expanding existing mines, etc., that new supplies in this structural decline. It's structural, meaning it's not something where you can flip a switch and it'll just automatically go back up. In fact, if you talk to mining executives, they'll tell you, yeah, we'd love to see $50 silver, but what's it going to be 6 months later? It's going to be back down to 20. So they need to see not just a higher silver price, but a sustainably higher silver price before they're going to spend millions and millions or billions of dollars building new mines. They're not going to do it if silver is below $20. They need a sustainably higher price to to change the structure of this. And the reason this is important is because new supply, when you and I buy a Silver Eagle, 2 out of 3 ounces that are bought every year come from new supply. Only 1 out of 3 come from existing supply. So you got to keep the new supply's got to keep up, right, to supply the market. And I'm sure you've talked about a lot of guests, but silver doesn't get recycled as much. A lot is lost every year. Those estimates vary, 15% of the low end, maybe 30% of the high end of silver that's just not going to ever be recycled. The amount in your cell phone, it's actually like, maybe a couple contacts, and, for solar panels, it's a paste. That's hard to, recycle it. And it's not economically viable to do so. So you're losing silver every year. So could there be a supply demand crunch? The LBMA on their site, if you believe them, they list, lots and lots of silver that is available for whatever the case might be. But you could still get Mike Maloney's unobtainium and unaffordium scenario if the price goes high enough and the demand goes high enough and the supply still isn't, new supply still isn't meeting the market. And then what happens if governments get involved? And what happens if industry gets involved? Keith Neumeier's argument, First Majestic Silver there about, Samsung, he's talked to these companies that would like to take supply directly. They're kind of cagey about how much silver they really use, So what happens if the industry gets together and decides they need to, secure up some product by buying some miners outright? There's a lot of scenarios where this, supply demand crunch could play out. I don't know if that happens. I think that is very easily could happen. But if we get, there's no rush like a gold rush, right? Well, there's also a silver rush. And if we get a silver rush and you have this scenario setting up with increasing demand on both the industrial and monetary side, right? Both from investors and industrial users, and you have supply doing this, look what happened to the comics last year. They had to go to the LBMA. They had to go to London just to meet demand. So yeah, this could happen. Absolutely, it could happen.
All right. So what are
I'm not invested. By the way, I'm not invested in silver because I think that is the reason. That's not why I'm invested, but I think it could easily happen on top of everything else that's happening.
Right. And it doesn't need to occur for you to be right about your own investment thesis. So what do you think the top performing silver and gold stocks are going to be in 2021?
Well, where I've placed my bets, and I disclosed this at the VRIC conference that came out yesterday, I think it was. But there's a couple more here I want to share with you and your audience too. But I definitely like, and again, these are, first of all, this is I own these stocks, so full disclosure there. And I'm kind of talking my own book, but I own a lot of stocks, and these are the ones I think I'm the most excited about. So one is Liberty Gold. That has run up a lot, so just be careful. Make sure you buy it on dips. But they clearly have something there in Idaho at Black Pine, and that's going to be a mine. There's little doubt about that. I think a lot of analysts at conference I've been to like a year ago, they were excited about it then. So I think that's a keeper. Go Gold is another one. I really like that one.
Yeah, me too.
They actually have a small production going on to fund their other exploration. There's a lot of catalysts coming out there this year for that. They have a PEA and a resource estimate. Another one I really like on the gold side is Maple Gold. I've talked about this one recently a lot. So basically the situation with Maple is it's been around a while, but the project is this is simplistic, but it's like a dike system where the dikes are shooting up toward the ground, right? As opposed to a vein system that goes along like this. So these things may not all connect, but Agnico Eagle has joined in with them, become a major partner to help with exploration, millions and millions of dollars they're putting into it. So they think there's something of value there, right? The grades that are coming back from there are actually higher than what the Canadian Malartic mine was. And Canadian Malartic was one of the largest, richest gold deposits in Canada. And these grades so far Again, this is early stage, but they're actually higher. So that's very promising. You have Fidelity bought over 18 million shares last year of that. And you have former executives from both Robert Friedland and BMO that have come on board to Maple Gold Mine. So there's a lot of people with a lot of very successful experience in the industry that like this stock. So I like it too. And then on the silver side, I definitely think Discovery Metals is one to own. That's definitely a strong one. Reyna Silver is a little more speculative, but that was a deposit that MAG had, spun it out into Reyna. You have the number one geologist in Mexico exploring that, spearheading that. So there's a good chance they'll find something there. And then the last would be GR Silver. I really like GR Silver. So that's basically a past producing mine that they're applying new modern techniques to for exploration, and they're definitely having some success. So it looks like there's going to be more silver there. So that's a good one too. So those are ones that I really like right now that I think could have a good 2021.
Jeff Clark, give me your gold and silver price predictions for 2021.
Well, actually, I corporate asked me to write, prediction articles, which I don't like to do. Giving a time and a price, that's the death knell of giving a prediction, right? Because it's so easy to be wrong. But I think without a crisis, silver, gold's going to be, the $2,200, $2,300 range. If we get some other type of crisis, then it's going to be $2,500, I think, by the end of the year, or at some point during the year at least. And for silver, I think once it breaks through this trading range that it's been, and I do think it's a trading range. It's not the death of a bull market. It's a trading range. Once it breaks through, once it hits 30, then it's going to go to 35 pretty quickly. And after that, it's direct shot to 50. So I don't know if it gets to 50 this year or not. It's going to take some kind of major catalyst to get it doing acting like that again. Could be the inflation thing that we talked about. But so if we get some kind of major catalyst like that, I wouldn't be surprised to see silver hit 50. But I'm not banking on it. I'm banking on the big picture, and I think 50 will be a launching pad to 100 at some point someday.
So you are in the camp of believing that it won't be a trip to 50 and then back to the teens and 20s for 10 more years. You are in the camp of believing that we're on our way for higher highs.
There's no guarantees. Nobody really has a crystal ball, right? But really, there's too many catalysts, and just take inflation, for example. If inflation does happen, once that cat's out of the bag, that genie's out of the bottle, whatever analogy you want to use, once that happens, you don't get it back in. That we're in a new trend. It'll be a major commodity uptrend. It'll be a super trend. It'll be a 10-year thing or something. Silver could easily happen that way too. And that's just on the monetary side. Then you have the industrial side where all this stimulus and all these green programs that Biden and other countries want to do as well. Just the automotive industry alone, it's the use for silver in the automotive industry because of EV use. EVs use almost twice as much silver as an ICE vehicle, internal combustion engine, almost twice as much silver. So green, silver makes green technology what it is, regardless of the amount that's used. It's a vital component to make green technology what it is. And so the more of that's going to be used, the more silver demand there's going to be. And it's going to be so great in the automotive industry that it's going to be the second largest demand for industrial users, the automotive industry, after solar. And solar is only going up as well. So you could have all this going on in the industrial side that's going to push on supply as well. That could be a price driver. So,
all right, I like to hear it. So, last question: you think mining stock portfolios will outperform or underperform 2020?
Oh, that's a good question. I hadn't thought about that. We could stay flat for a while. I think it depends on what happens here once the economy reopens, whatever that looks like, right? But once the economy reopens, I think we'll have a pretty good idea of how the rest of the year is going to go, and that may not happen till summer, right? So let's put it this way. I think what happened in 2020 is a prelude to what's coming one of these years, right? So I think over the next 2 to 5 years, that's our sweet spot, So I've just been using this time period now to get positioned for that, quite frankly. So,
all right, amen. Give me one thing that you are excited about or grateful for in 2021.
Well, do you want to talk about First Majestic Silver?
Oh yeah, please, let's do it. Yeah.
Because a lot of people ask about it because it's been a laggard, right? The silver stocks have been going up and First Majestic's kind of lagged. And there's been a lot said about the tax issue, from myself included. That's probably the big lag, because if there's an outstanding legal issue, some institutional investors have a mandate that they can't, or a bylaw that they can't buy that stock for that reason. So the things to be aware of with that stock is the resolution of the tax issue would be a huge catalyst, even if they get stuck paying some of that, and maybe they will. There's been no movement on that recently, at least this year. It's probably going to go to international court, in my opinion. That's me saying that. That's not, the company saying that. But if it does, then that'll be a good thing, because then we're getting closer to the end, right? So, but a resolution of that would be a major catalyst. But
do you anticipate one? Do you anticipate one coming? And do you think that if we don't get one, that we're going to stay in this kind of range that we've been kind of in for a while, and it's kind of lacked the ability to kind of have that, oomph that it has historically had. So do we need that resolve to get that?
It needs that result unless we get a spike in the silver price, another run in the silver price where it hits 30 and blows through it, keeps on going. First Majestic is definitely going to benefit from that. In fact, First Majestic, this is one of the points I like to make about the company, is they have the highest percentage of their revenue coming from silver than any other company, any other mid-tier or major primary silver producer. It's like 76 here. I just did a chart on it. I'll tell you exactly. It's 70. Yeah, it's 70.4%
of its total revenue comes from silver.
Comes strictly from silver, and so
70 what percent?
70.4. Now that's a projection for 2021, but it comes from BMO.
That's impressive.
So that's a good one. Below that, you only have 4 companies on this chart that get at least 50% of their revenue from silver. That's it. That's it.
What were the other ones? And who is the next closest? I'd love to know by comparison.
The next closest.
What's that?
Gatos, Gatos. I don't own it, but it's a growing silver producer. They get 67%. Silver Corp gets 60%, and Endeavor Silver gets 58%.
Got it. So
all the others, Pan American Silver gets 31% of their revenue.
I know. I learned that from one of your presentations a few years ago. Actually, you were doing a presentation at the time. You were talking about Alexico. I think you talked about Endeavor, a couple other stocks, and you pulled a chart up, and I was really surprised to see that on Pan American. So shout out to Jeff Clark.
Yeah, it's really amazing. Pan American Silver only gets less than a third of the revenue from silver, So the point of that whole discussion, though, is if you want leverage to a rising silver price, you're going to get that more with First Majestic Silver, despite the tax lag, right, than any other company. Now, MAG is going to be up there, too.
Okay.
They started to pour metal, but they're not at full commercial production. That deposit down there is so big, it's going to take them a full year just to reach commercial production. So that'll be probably by the end of the year. Do you think it would
be smart for First Majestic to buy a mine outside of Mexico?
Haha.
like a big boy mine. Like if they're really, if Keith's really trying to like be $100 company and like be freaking huge, do you think that that's a good idea to get like a, legit huge
Well,
mine outside of there?
Ermitage is going to come online, and that'll increase production company output by 30% over the next 2 to 3 years, within 3 years at least. So they've got some built-in organic growth already, but M&A, I'm convinced is on the table with them. They can't say anything because they're a public company, but you can pick up things. And I think that that's a very realistic possibility is them acquiring something. What I really love is for them to acquire one of the silver stocks that I already own. That would be a lot of fun. But I want that, like GR Silver, I want that to go 10x before they buy it out, right?
So do you think that that's on the horizon in the near term? Like, do you think that there's a possibility that he's looking to pull the trigger on something like that in 2021?
Is there a possibility? Absolutely.
Because I gotta think,
I wouldn't be surprised.
I gotta think Keith knows the effects, the negative effects of the, you just see it on Twitter. A lot of people are afraid of the stock because of the lack of the tax issue. And Keith wants to build this huge. I wonder, it seems like it would have a drastic change on psychology for a lot of retail investors if they saw them make a big move, and I'm sure I would think Keith is aware of that. So you think that's a possibility?
Just keep in mind though, production is growing, costs are going down. You have one of the best, most successful CEOs in the mining industry heading this up. Strong revenue from silver, the highest in the industry. And their recovery rates are also going up. They're bringing on these HIG mills. We didn't even talk about that, but there's another one coming on this year that's going to improve their recoveries, which improves the amount of silver they produce and at a lower cost. So you have a lot of good things already going on with the company. You just have that one darn drag on the stock that's holding it back. But the good news is we don't know when it's going to get resolved, but it will get resolved. If silver's in a 5-year bull market and this takes 2 more years to resolve, which I don't think it'll take that long. Let's hope it doesn't take that long. But if it does, if you plan to hold First Majestic for the period of the bull market, well, hey, you're going to benefit whenever that tax leg issue gets resolved. So that's kind of how I look at it. I'm definitely holding First Majestic to the top of the bull market. They're doing everything else right. They're firing on all cylinders. I like them. I know those guys. I've been to their mines. So I think it's one I want to own, particularly because of that leverage to silver. I really like that because once the tax issue gets resolved, what's going to happen? The institutional investors are going to pull up a chart like I can do, and they're going to say, wow, you get the most leverage from First Majestic, twice as much or more than you can from Pan American, and they're going to buy it.
But basically that can't happen unless the tax issue gets resolved. Is that what you're saying?
That's not with all institutional investors. That's just the ones that have bylaws. And we didn't even talk about their short position, right? They have 42 million shares short. 42 million.
Isn't it like 20% of all their outstanding shares? I think I saw that Todd Anthony posted today or something.
Yeah. I don't know the exact percentage, but the data from like 2 weeks ago from who put it out, CFTC or whoever, it was 42 million shares US, of the US shares are short. And so a lot of this because, they think the stock's going to go down. Some of it could be a hedge, but it's at a historic high. So that's another snapback catalyst for the stock, right? Because once things kick into high gear, when silver starts moving, tax issue gets resolved, those guys are going to have to buy to cover, and that could really catapult the stock. It might even look like a junior at that point.
Yeah, no, it's a true point. All right, so I think that we'll see what happens. Obviously you got a good guy at the helm there. I've wondered about the, maybe some combined camaraderie with having, Eric Sprott so invested, and they're kind of, two of the biggest guys, and they're, both high achievers. I wondered if, that'd rub off and they'd go after some M&A and kind of take things to the next
I
level.
think it's coming. Yeah, I just, I can't tell you when. I don't have any special insight, and management, wouldn't tell me even if they did know, right? They can't, so but I think it's coming. And yeah, Eric Sprott's investment, that was a nice surprise. A lot of people don't know this, but that's his largest investment in the silver space. Equity position.
Yeah,
So
no, it's
30 juniors or whatever it is, right?
Some crazy
But his
amount.
biggest dollar investment was in First Majestic Silver. So
yeah, no,
I think there's good things ahead.
Yeah, great things ahead. Okay, so everyone for listening, we truly appreciate it. Please be sure to hit the like button on either side, right there and right there. Follow the Gold Buddha over on Twitter in the link right there down below. And Jeff also has some of the best articles that you'll find out there on macroeconomics and precious metals, and he publishes them all on Gold Silver. So he publishes all of his articles over on Twitter. So must follow if you like the very amazing research that he puts out. So thank you for joining us, and it's always good to see you.
Great to see you, Jake the Snake, right? Or I gotta come up with this good name for you.
Hey, just get back to me on it. Next time we'll plan on it.
All right. Next January, you're going to be cutting your hair, you think?
Yeah, I don't think we're going to get $75 silver, but I would happily cut my hair. Heck, I would bald it. I'd dye it purple. If we get $75 silver in a year, man, it's going to be.
That'd be awesome. So thank you, Jake. I'm thankful for you. We met on Twitter, and a lot of negative stuff about Twitter these days, but I'm thankful that we got to meet. I got to meet great people like you. So that's what I'm thankful for.
Yeah. Amen, Jeff. Yeah. Same with me. Twitter has let me meet a lot of really, actually, I would call either good friends or good mentors this year. So I'm very grateful that you and I have been able to meet, and I consider one of those.
Thank you, Jake. So yeah, check us all out at goldsilver.com. Mike's got a lot of good stuff there, a lot of good videos. And of course, his Hidden Secrets of Money series is
the classic,
right? So,
all right, everyone. Thank you.